Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, as we inch closer, we're back above the 24,800 mark. The Nifty is about 50 points down in trade right now. It's been a volatile day, so to speak. The key sectors that are now driving the show in the last half an hour are the auto and the financial services stocks. Rest of all of these sectors are still down in trade. Sharp declines can be seen on media stocks. Mid caps have lost a lot of ground, 1.4% down. So the broader markets are on the back foot today. Metals, FMCG, IT are also among those sectors which are down by over 1%. The key stocks which are still bucking the trend today: Bajaj Auto coming back sharply after thrashing last week, 4.5% higher. HDFC Bank holding up about 3% up in trade. Asian Paints, M&M, Tech Mahindra, Eicher Motors, these are the kind of stocks that are still pulling up in this weak setup in the market. Let's look at the top drags though. Tata Consumer Products is down by 7%. Kotak Mahindra Bank, Bajaj Finserv, IndusInd Bank and BPCL are still the top drags right now. Time to welcome our top guest on the show to help us understand how do we navigate through these volatile moves. Mr. Sunil Subramanian joins in, and he's a veteran of the markets. You've been seeing him on the channel, and of course you've been following him for years as he discusses with the wisdom about what exactly should you be doing in this current market. Warm welcome to you, sir. Season's greetings to you, and thank you so much for taking the time out. You know, you've seen so many cycles in the markets that it makes perfect sense to understand from you. All those first-time investors, they're actually getting disheartened with this entire October, the way it has panned out in the markets. What is it that you are sensing in this market? Are we consolidating? Are we nearing a bottom? Or is there still more to go? Tell us, what is it that you believe the markets are going to be presenting us with going forward?
So I think the first thing to realize is that none of that what's happening is related to domestic stories. Okay, I know the earnings season has been a little weak, but I would not attribute this kind of a correction to or the kind of FII pullout you've seen to those earnings, because I think by and large the street was expecting a soft quarter. Okay, so that's not the issue. I think the issue is more to do with two key factors from outside India. One is that China, having corrected so much, represented a very strong value buy for short-term FIIs, right? So as you know, something like $10 billion of selling has happened by FIIs. The last we saw such during a month was during COVID, right? Now, such a huge amount of selling can only be explained because if you see out the $930 billion, 10 billion going out is a small percentage. But it's basically two aspects: book profits as you get closer to December, because fund managers of hedge funds need to be paid bonuses. So if you're seeing a good high, and then fresh deployment, China looks a better pick because the government is trying. Today there was a rate cut also to stimulate the economy. Now, while the economy gets stimulated or not is something time will tell. The fact is markets love rate cuts. So the market bounced back. The early bird hedge funds are trying to get in there to win. So I would say that this is a volatility caused by external factors unrelated to India. The second aspect here is the strengthening dollar plus the US election related uncertainty, right? That's leading to an emerging market overall, looking, saying if dollar is strengthening, then my returns need to be that much higher from the emerging market because I have to compensate for the local currency weakening, which will when I take out money, right? So in this context, then how do we explain what's happening in the market today? You're seeing that actually large caps are holding up compared to mid caps and small caps, right? That's because domestic fund managers over the last month and a half have been sitting on cash. Because of the valuations, they've been hesitant to deploy and they're sitting on cash. Now, the moment the FIs are selling, when you get good quality stocks correcting, they'd rather go and bet on quality because everybody's run the value creation, PSUs, those kind of things which were very value. That run up has happened. Now it's quality season. And when you're then looking for quality, you want the right price to buy. Now you'll say that if that's the case, why is there a fall at all? That's because if you see a domestic fund manager will be smart, that he'll wait for some amount of correction before he steps in and buy. So 1 rupee to $1, that whatever they do, as a smart guy, I'll say let it correct a little and then I'll buy. So there's enough money in the domestic fund managers kitty to buy good quality stocks, whether they be large caps or large mid caps. Now in the small caps, unfortunately, FIs don't play a lot. So their actions are not directly affecting, but small caps are correcting because fund managers are booking profits, where they've seen huge gains in the small cap and the smaller mid caps and using that as gunpowder to buy the good quality large caps when seen. So very unusual behavior. Normally you say large caps correct the least, then the mid cap, small cap. But in such a situation, actually large caps are holding up. The Sensex and Nifty are flat. So I think it's pretty logical. And from an investor's perspective, I would say just keep quiet. You've already given the money to the fund managers. They are doing it smartly, right? You let your SIPs continue because the more you do that, the more the fund manager gets money to handle. This is not a time to go and do bottom fishing by individual investors on individual stocks because earnings season is upon us. And you see the market is such an elevated valuation level that even slight bad news is getting punished and slight good news is getting rewarded. So I think it's a very, very iffy retail investor can't understand this. Okay? So leave the money in the hands of fund managers to do the needful.
And that's the best advice that one can definitely get on how to protect one's capital and at the same time get a chance to continue to outperform even in this volatile turn of markets as well. Now, Mr. Subramaniam, help us understand. You did say that the earnings have not panned out as expected, or maybe it was low expectations already, and on top of that, there are some disappointments that are coming in. But where do you expect the downside should be bought into, or earnings upgrade can first kick in terms of the kind of numbers we're getting, and how are you taking the advantage of this market volatility?
So for me, the earnings season is very crucial, but not from the earnings posted versus consensus versus Q on Q versus YOY. That's less important for me. So what's then important in the earnings season is the guidance. Because this is a very crucial quarter when the market changes leadership, right? It changes from fully discounting FY25 to start to discount FY26 and 27 for some longer dated, those who have a longer view. So when you're then changing your position, right? And you would say, let's say market expects a 10 to 12% overall EPS growth for next year, automatically your valuations look comfortable for a 10% premium, right? But if there are sectors which are going to look at much faster growth, then I don't care how the quarterly season turned out. I'm looking at the guidance that the management is giving on the future. And those discussions with the quarterly analyst con calls are very critical. And the sectoral rotation that will happen can only happen on the basis of recasting your discounted cash flow methodology for the next few years now. So to that extent, there will be volatility because it takes time to churn the data, crunch it, understand. And then when one company says something, you wait for his competitor to come either and reinforce it or contradict it. So you don't take a call based on only one company in a sector. You wait for the top 2 or 3 to come through. So the earnings season is very crucial, but not from. And hence, if a company gives me a good guidance, but his quarterly numbers have disappointed, I would step in and buy. So actually, that's the filter I would use, right? For me, this quarter's news, it's already done and dusted. It's in history, right? The quarter happened, right? So to that extent, I would pay a lot of attention to companies talk about the future, validate it with their competitors, and then go in and buy something which is corrected. So then I'm getting absolute good value.
Okay. Any key sectors that have come onto your top radar where you may have incrementally bought into in the recent correction of last 2 or 3 weeks?
I think BFSI, because to me, it's there's a lot of headwinds and some, RBI speak in a news flow that deposit growth is not keeping pace with this. People saying people are shifting their money from there to mutual fund. Then RBI coming down and saying, some of the NBFCs are charging too high rates of interest. So there's a lot of negativity around that, which has led to, I would say, that sector suffering a bit. But to me, whichever way India progresses, a capex driven growth cycle or first a consumption pickup and then a capex cycle, it's the banks and the NBFCs who are going to be there at the forefront lending money. And these net interest margin considerations will go away when real corporate demand for credit picks up. That's number one. Second is within the BFSI, remember, not everybody is a lender. Right? What India is going through is this huge per capita income increase. I think by the end of the decade, we should be heading closer to $4,500, $5,000 per capita from a 2.5. So that additional money, right, is not necessarily going to consumption, but is going to savings. And channelizing savings is in the hands of wealth managers, insurance companies, asset management companies, broking houses. So to me, BFSI plays both sides of the play very beautifully. And on top of it, you have this rate cut expectation in the US, which means they say sometime or the RBI will cut, and rate cuts are best for financials. So to
Yeah.
me, all the negative news around any financial SPAC today, as long as the corporate governance and the capital adequacy of that company is fine, I have been a buyer and I will be a buyer.
Okay, and are you avoiding any sector as of now too? Something which you have overlooked?
Well, to me, I think the run up in the infra, defense, those spaces, right? I think a lot of money has been made. You see, 5 year returns of the average infra mutual fund is 30% per annum, right? Now, arguably, the next 5 years, the infra story will play out, but whether you will make 30% per annum in the next 5 years, I'm a doubt. So, I think in sector reallocation, I would say, and mind you, in infra, what happens is that since the government has driven the infra cycle, right? The private sector capex cycle, there are green shoots, there is talk, but it's yet to really kick off on the ground. And why I say be cautious there is, if a company floats a capital expansion order, and there are a number of capital goods companies bidding for it, only one of them will win it. But today, all the three stocks have run up, right? So the winner, picking the winner there is very crucial. But today everything has run up saying capex cycle, capex cycle. So
Correct.
I would say book profits there, rotate it, and wait when the order clarity comes in. I'll go and buy the winner there rather
Hmm.
than, yes, I may lose a bit of thing that the winner may get more money, but that's okay, perfectly okay. But I think in cyclical sectors, I think it's good to book the profit when you see it, convert the paper money into cash money, and then redeploy it. So that's where I would be a bit cautious. And to me, a lot of the run up in the defense, for example, and this is something where I would book profits.
Okay, I'll circle back to the BFSI space, especially the private sector banks is what I wanted to take your view on. We've seen that again the engine is restarting on HDFC Bank, the way it's pulling up slowly and gradually. Axis Bank has surprised everyone on the higher side as well post earnings. Where is it that you would be, or maybe what would your pecking order be when it comes to private sector banks?
So I would actually give a slight see one HDFC because it's not run up as much. Okay, I think the quality of the bank is too good, and it's not till recent. There's a lot of negative overhang because the merger, I think, brought down a lot of stuff. But I was happy to read that they are not having an aggressive loan growth, right? And they're going to focus. So HDFC. The second is for me the corporate orientation of ICICI Bank looks very attractive to me
Hmm.
because I think it's the corporate cycle which is going to drive the retail cycle. As opposed to that, the corporates retail ran the last half a dozen years, but the
Hmm.
corporate is going to really run. And I think ICICI Bank, because of the ICICI parentage, right, is in a very good position to be there. You mentioned private sector, so I'm not talking about anything else. So to me, ICICI Bank as a corporate lender would be there at the top. And I think Axis is also got a benefit of the old UTI Bank, the coming from that PSU, that a little bit of culture. So they have a more corporate oriented. So I would be
Hmm.
broadly to put it, good quality, well capitalized, corporate oriented banks would be my good pick because net interest margins are not a cutthroat competition like they are in housing loans and in retail loans, where everybody it's a fight to the bottom. But in corporate lending, there are very few banks which can go to an SME and say, "I'll give you 500 crores." You have three banks competing for that. But in a housing loan, you have 10 different banks competing for your loan. So I think the competition is less. The net interest margins will be much better. So I
Hmm.
think that's where I would put my filter around who has got the best corporate banking ability to access it.
Okay. And versus private banks, what is your view on PSU banks right now? Is it a strategy of like, maybe pull out whatever profits you have from PSUs and put it in private right now, at least in the interim?
Not necessarily, because I
Hmm.
think that PSU banks actually are the ultimate corporate lenders. Okay, there, if you look at it, the processes which private sector banks have means a lot of the small and medium will not qualify for their uh, lending. But PSU banks have a history of lending to the MSME and to the corporate. So the key then is to choose a good bank, which is not going to lead to an NPA 3 years, 5 years later in the way they select. So the top PSU banks are still, the SBIs of the world, the PNBs. They will continue, I think, to get a big share of the lending pie. And mind you, they have the advantage of a larger CASA base. So there are less NIM pressures on them. They're not fighting out in the Maramari in the market to get deposits at a higher rate. So good
Correct.
quality public sector banks would still continue to be my top picks.
Okay, wonderful. So that's as far as the banks are concerned. There are many more pockets, but we'll also address some of the other sectors in the markets. Autos is something that I wanted to discuss with you. How was your assessment of the Hyundai IPO, and how do you think its incoming will change the landscape of the Indian auto sector here? The way Bajaj Auto had rallied, doubled, tripled from its recent lows, not too many months or years ago, and the way it crashed last week. How are you assessing the two-wheeler picture, especially with the management's commentary of muted festive demand?
I think that the festive demand is crucial there because two-wheeler has suffered from the K-shaped recovery, right? You've seen even small families migrate to cars, and they are going straight, bypassing the smaller cars straight away to the cheaper SUVs.
Correct.
So the K-shaped recovery is what has hurt the bottom end of the auto pyramid, right? And there was a hope that with a good monsoon, with rural demand coming through, that the two-wheeler would pick up, right? News flow is mixed on that, as you correctly said. So I'd rather wait for that to happen because to me, the bottom of the pyramid growth is crucial for Indian economy's growth. Okay. So I think that this whole K-shaped has to come to a more U-shaped recovery. And it's a bit early days. I would take my call on this based on how the festive turns out. Because if you miss the festive season, then it's a long journey ahead of you, right? But if the festive season has picked up, then you can say that the mood has changed. So I would rather wait for the completion of the earnings season. Only one or two players have so far reported. We'll wait. On the Hyundai IPO itself, you see, look at it this way, right? I think Maruti Suzuki was the beneficiary largely of being the only proper car listed play in the market, whereas Hyundai in market share. So Hyundai was there in the industry, but not in the stock market,
Yeah.
right? So to that extent, he's going to come. The supply in the stock market for a good quality auto company has gone up now, which is very good news because then you have quarterly earnings reports from Hyundai to really test what Mahindra is saying, what Tatas are saying, what Maruti is saying. So it's very healthy for the thing. Now the IPO itself wasn't a great success because I think two reasons or three reasons rather. One was setting the pricing. I think they priced it at the max. So they didn't leave any money on the table, especially for the retail investor. So that's why the retail subscription was very less, number one. Number two is a fact that the money that they were raising was not going into the company. The money was going to the promoters and was going out of India into Korea, right?
Yeah.
So,
Yeah.
and which reinvest in the business, it's I would say, a different kettle of fish on IPO where the promoters are taking the money out as profit booking, right?
Correct.
Now, I'm not saying that they are negative on India. They just want to make money out of a long investment. Fair enough. I'm not doubting the integrity or the reasons. But from a
Sure.
market perspective, this money is not going to go and boost the future
Yeah.
earnings growth of the company. So that's a negative from a IPO reason. The third, and I don't know, it's how far to attribute how much percentage, but there has been social media, and that's why the retail probably got a bit nervous. The social media that Hyundai Pakistan had put something tweet out supporting them, led to a lot of, I was in the social media, I was seeing a lot of saying, don't subscribe to this IPO. This is what Hyundai Pakistan put up. They are supporting Pakistan versus India. It was on Kashmir and something like that, right? So to some extent, retail sentiment, I think the Indian public today is far more nationalistic, far more sensitive. You saw what happened with Maldives tourism
Yeah.
when the government changed there on an anti, right?
Sure.
Immediately they drop, and their prime minister made 3 visits or 4 visits to India to try and get us back. So the
Yes.
Indian public has become much more sensitive to perception of national hurt, and to that extent, I believe that this might have played a small role. How much of it I attribute, I don't know. But the social media was all over this thing when Hyundai Pakistan had done this. So probably that hurt the retail sentiment a little bit. That being said, I'm the confident of the company is on a very solid ground in India. They've done a lot of hard work. They've got good mind share and market share with the people. So I don't say anything wrong with the company's performance. So from that point of view, I think it's a good stock to have been added to our universe.
Okay. So that's about the auto space. The other big sector I wanted to take your view on is the IT sector. Most of the big earnings are already out. Some of them will be coming tomorrow as well in terms of the mid-cap IT names. Now, a failure of any surprise on the positive side from most of these IT firms thus far. Plus, like you pointed out, there are several macros that are as overhangs, in front of us, like the US elections. Whether it will be a hard landing or a soft landing, we do not know in the US again. How would interest rates really play out? Again, there's another overhang. The guidance does not show that much promise yet again. But how should one be really looking at the IT story? Are you adding IT names amidst this consolidation?
See, I'll tell you what, IT got to be looked at it from a safety pick rather than a growth pick, right? So as long as the earnings growth is not disappointing, as in a decline or something like that, IT
Sure.
should always be a part of your portfolio as a safety pick. Why? It's non-cyclical, it's counter-cyclical, number one. Number two, remember that one of the big changes, the US interest rate scenario, right? Yes, the rate
Yeah.
cuts may get delayed a bit because
Hmm.
the economy news is coming stronger. So the rate cuts may get delayed. But over the medium term, definitely there's a rate cut cycle going on in the US, slower maybe. So that rate cut cycle is beneficial for BFSI, and BFSI happens to be the biggest buyer for IT. So
Yeah.
overall, I would say, regardless of what the companies are saying, I think the overall scenario for BFSI in the US is good, means it's good for IT demand. Okay, number one. So I'm not too worried about that growth. Yes, it'll be high single digit kind of, not super double digit growth. That's fine. The
Hmm.
second aspect is the dollar strengthening versus rupee weakening, which is
Yeah.
positive for export oriented sectors like IT, right? So that's another tick box for me on why IT should be in the portfolio. So first
Hmm.
as a safety pick, second with a positive view on the BFSI space in the US pick, and third as a rupee depreciation story, right? Their dollar based earnings will be obviously better, right? So
Hmm.
those things
Hmm.
are there. So I would say that, to me, again, the nimbleness of smaller IT companies, because there is also a revolution changing. So IT model, business model is changing towards
Hmm.
AI and stuff like that, and IT consulting. So I think that the ones which also display more nimbleness would probably be a better bet, right? So I would actually say that one safety component to the large cap IT names, but I would also allocate a fairly equal to a bunch of mid cap IT names which are up on the curve in terms of artificial intelligence and machine learning and all that stuff.
Right, right. Okay. Now, apart from the IT space, autos, BFSI that we have already discussed, or also wanted to go beyond this and talk about the consumption space that you began by talking about as well. Soon as we see per capita income rise, consumption is a theme. India is a consumption economy, so we need to address this space too. Retail is something that I wanted to discuss. Of late, you would have also read a lot of reports which talk about how the landscape is probably at the helm of change, retail versus e-tail, e-commerce story, how it's going to be seeing increasing competition with Swiggy IPO, which will be now coming in. What is it already doing to an established player, one of the loved names like D-Mart, for instance? How is Trent overtaken D-Mart in the recent times? How should one really navigate through all these stories within the retail versus e-tail space, sir?
So I would suggest not to try and do that navigation and to stay diversified across all these players. See, it's
Okay.
very tough to see the winners, right? Because quick commerce versus e-commerce versus the brick and mortar stores, it's going to be a battle out there. But overall consumption is going to be a winner. Individual stocks is very tough to pick because of the fight and the investment. So I would say that because I see the whole K-shaped recovery translating to a U-shaped recovery, number one. I see that India is going to go through a softer interest rate phase. I don't expect RBI to cut rates with anywhere near the speed that US will do. It'll be much slower, much longer, but still, it's not an interest rate hike period. And within the auto space, autos are rate sensitive. Reality is rate sensitive, so they should be positive. So I remain positive on the overall consumption space because the overall growth I see as being driven by a more bottom of the pyramid story. The higher end also, if you saw Navratri sales in real estate in Bombay, you saw
Yeah.
fantastic. So there's no
Pre-sales were
evidence of any slowdown,
released.
right? So I
Hmm.
would say and I don't think consumption has received the kind of money flow that infra received, for example. So still a gap between that story being bought into. So I would say that buy diversification is your biggest strength there. Rather than go and try to pick a winner. So whether it's going to be Swiggy, going to be DMart, going to be Trent. I think that it's going to be very tough to predict. So the best way is to hedge your bets and buy a little of everything, because everybody is going to benefit from the revival due to the per capita income growth of
Yeah.
consumption and all of that. So I would say be a diversified consumption player, but do definitely be in consumption. Don't avoid that
Wonderful.
segment.
Wonderful. Before I let you go, sir, we started off by talking about the festive spirit and festive cheer. Uh, this is the time when we always ask our top guests to help us understand with a 1 year forward outlook to the Nifty. How do you see the Nifty by next Diwali 2025? And any key top sector, top stocks that you can see as outperforming over the next 1 year? Where should one place their money? Fresh ones.
Well, uh, Shaili did ask me this question last time we spoke to. So I would say that I would expect a 12% upside to the Nifty from now.
Okay.
Okay,
Okay.
that's right. I think that's the right way to put it. 12% is a decent upside. A sector I already mentioned, like to me, BFSI is the top pick, and a stock within that. I think I already told Shaili that State Bank of India for me, because when the corporate lending picks up, the access to the MSME space, there's nobody to match State Bank with the kind of reach they have. So I think they have professionalized a lot, and I think when corporate lending picks up, State Bank, and by the end of a year, I do expect that corporate lending would have picked up and India will be there. So to that extent, for me, State Bank as a solid, PSU bank will be the top pick.
Wonderful. Well, it's always such a pleasure to speak to you, Mr. Subramaniam, and gauge through a widest possible lens, look at the longest time frame, and then get concentrate all that wisdom into the last 25, 26 minutes that we've spoken to you. Always a pleasure to host you. We wish you all the very best. Season's greetings to you, to your team, to your family members, all your loved ones. We hope you have a fantastic Diwali. Thank you so much.
Thank you. Wish you the same, and to the viewers too.
Thank you so much. All right. So that was like 25, 27 minutes of a masterclass on various topics within the markets. I'm sure this is something that you should be definitely looking at. But you know what? We also have another